Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Danny and Delaney and Bert, the Dividend Diplomats. Let's freaking go. Everyone, Saturday morning, grab that Joe, grab that water, get your breakfast, get that bowl of cereal. Today, we're going to talk to you about a company that has nothing to do with food or coffee. We can't wait to talk to you about this dividend stock.
Smash that subscribe button, guys. Give us a nice thumbs up. This is a dividend growth stock, and Bert will continue to use some of these funny words to talk about the price movement of this stock. But man, that dividend growth rate is oh so sweet, guys. Let's dive in to this possibly undervalued dividend stock to buy right.
Yeah, finding individual dividend stocks is not easy right now, Lanny. It's interesting. You have your McDonald's, which we just recently talked about. We have your Johnson and Johnson's, which are showing signs. You have Nike, which is down, but not quite in the buy zone. Outside of that, there aren't too many individual stocks that really jump off the page at you. So while we're doing research, we're always having fun. We're always running stocks through our Dividend Diplomats dividend stock screener. So you know what? This one, it didn't look bad when we ran it through the screener, so I thought it'd be fun to buckle up, talk about it, look at its earnings release, look at the balance sheet, and see what we like or don't like. You'll find
It
out.
didn't look bad, and again, this is one of those companies that it's big, over 100 billion in market cap. And I own this stock, and I'm pretty sure you own some stock.
No, I don't. I never bought this one. I never bought this one. I bought the competitor, this one. I have the other one. It's in
Or
my wife's account.
mm,
Yeah, I never actually bought them. And it's kind of a mistake because they are up over 122% over the last 5 years. So, you missed out on a nice little double your money by not investing on it. It's all right.
oh, interesting. Okay, I thought, yeah, I guess I'm thinking it was in reverse.
Oh, yeah.
Reverse, guys. Yes,
Ooh.
a little roaring kitty there. But for what stock are we here to talk about here this morning?
John Deere, ticker symbol DE. Drive outside the city, go by some farms. Looking at them, you will see John Deere everywhere. They are massive players, agriculture, but they're not just agriculture in the farming equipment. They're also involved in construction and many other sectors. They're in residential too. A lot of people mow their lawns with that nice John Deere riding mower. It's great. They are, as we said, 100 billion in market cap. And interestingly, this year they're down 9.51%. They're down 10% over the last 52 weeks. So even though they've been up 122%, Lanny, over the last 5 years, this year they've just kind of been stuck in neutral. You can't get that deer mower out of the shed so easily right now.
Oh, man, that John Deere, guys. Yeah, I mean, you know, this company has they still they crank out earnings, they crank out revenue, they're cash flow machine. I mean, let's just for this earnings release, I know we're here to talk about as well from back in May, but man, even though it's not as great as what it was in the prior year, I still think that they perform very well. They manage their margins very well.
100% they do. So yeah, their um, net income was down in the last quarter. It was 2.37 billion, 853 a share. So that was down from 2.86 or 965 for the 6 month period. 4.12 billion, 14.78 per share, compared to 4.819 billion or 16.18 per share. So both 3 month, 6 month period are down from the last year. Lanny, is that trend still the same for sales?
Well, going in for the sales here, B, I mean, yeah, it's down. It's down 12% to $15 billion though, for the second quarter, and 27 billion for 6 months. But I mean, I don't have much words to say about how many, again, that's a large company doing large things, again, approaching, again, we're earning over $50 billion in revenue.
Yeah, that's the
And
thing.
able to produce the EPS that they're producing is just fantastic.
Yeah, you take the step back, sure, it's down. It hasn't grown as much, but it's still cranking out that money. And they're still forecasting over $7 billion in net income for the full year. So a nice, healthy amount of money coming in the door for John Deere. Lanny,
Yeah.
can you speak a little bit here about the balance sheet and just what's going on from in John Deere's balance sheet world? My gosh, I cannot talk tonight, everybody. I
Yeah.
apologize.
That's, we're filming this on July 4th, guys. So hope you guys had a great 4th. And we're having a couple of beers. It looks like maybe on his birthday, those
Nope,
birthday beers.
no beers tonight. I had a nice Sprite. I haven't had a good Sprite in a while. It
Yeah.
was refreshing. It was muggy outside. It was hot, so the Sprite just
Nice.
hit the spot.
Yeah, just checked the weather from what I was doing, and it was 97% humidity. So
Yeah,
nasty. But
yeah,
to
it was
get back
gross.
into it, yeah, the balance sheet, it's not as liquid as one would hope. Obviously, when you're dealing with big equipment as well, trying to grow via debt, seems to be the course of action here with John Deere. We usually like to look at the current assets over current liability for the current ratio, which speaks to how liquid they are, and try to go for 1 times or 1x, but they're actually below that at 0.67.
Mhm.
And then we like to remove the inventory from that top line in your divisional problem there to see how fast can they churn and burn. Taking out inventory for the quick ratio brings out 0.46. Debt to equity is not terrible, but it is close to 3 times
Yeah,
debt to equity.
not the balance sheet you like, but your point's right. It's heavy. There's a lot of investment, capital intensive business, so probably what you'd expect from that sector here. All right, let's run them through our screener, which focuses on three metrics: PE ratio, payout ratio, history of increasing dividends, and that bonus metric, dividend
Oh,
yield.
let's go. Let's see what this is all about, Bert. Let's dive into DE's PE ratio. What do they look like,
All
man?
right, their price is currently at 362.79. Forward earnings are 25.40 from analyst expectations for the year. That gives you a PE ratio of 14.28.
Hopefully they crush that, but that's just me.
Hey, sandbagging it.
Yeah,
Absolutely sandbagging it. So, hey, still, all right. Let's just say that game. It's a conservative one, and it's still 14.28 from the PE ratio perspective.
and then for their dividend payout ratio, that second metric, we like to look at it to get below 60%. Where its perfect sweet spot, though, is 40 to 60% here. So John Deere, though, is looking great. Plenty of safety in the dividend, plenty of room to keep growing the dividend like they have historically. $5.88 overall on a per year basis. 23% payout ratio. Very low. Again, John Deere, keep bringing those clippings and send those divvies our way.
That's right. Their dividend growth history is always interesting. Their 5 year dividend growth rate is 14.17%, but they've only increased it for 4 years. It's consistently trending upward, but it's not a consistent annual dividend increaser. That's how I would classify John Deere.
Yeah, and sometimes they do two or three increases in 1 year.
Yeah.
Um,
Sometimes they do none for 3 years. It's just part of the game with John Deere.
I'm looking back and I think what was it? Was it 2022? Yeah, they increased it to $1.13, $1.22, or 25. I mean, they were just like the last, you know, from 2020, 2022, 2023, the amount of dividend growth that we saw was insane because it started out at $1.05.
Mhm.
And you fast forward, and they're at $1.47 per share per quarter.
Yeah, they are not afraid to grow the dividend, especially when the results are going great. So interesting to see how they hold up. Their yield is now 1.62%, which is 30 basis points over their 5 year average yield of 1.32%.
Wow.
Yeah,
Okay. So not like your higher, you know, yielding portfolio here or, dividend stock here. Um, 14% growth rate, 1.62% dividend yield. But for that 5 year average dividend yield at 1.32%, trade 30 basis points higher than that 5 year average. Is that because they're down about 10% this year is causing that yield just to pop up just a little bit over that 5 year average?
yeah. And as you think about, as I was saying with their chart, we'll put their 5 year chart up here right now. It really hasn't moved much. It's got a lot of noise. You got a lot of up, down, up, down, up, down, up, down. But after that initial like pop to get it to 122%, it's kind of stuck. So that's why you aren't seeing a massive um, split from the current yield to the 5 year average because of everything that's gone on over the last 5 years.
So here we are, guys. I
Yeah.
mean, 14 PE, 23% payout, 14% growth rate on the dividend. Yield is over 1.5, over 1.6%, so higher than just about higher than the S&P 500. What do you think it'd be?
Put it on the watch list now. It's not a bad stock. Metrics aren't bad. We'll just see what goes on with it. Not rushing to buy it, not rushing to kick it off my watch list, but metrics look solid. It's a great company, produces a lot of money. Um, Strong income, strong revenue, even though it's been down, strong dividend growth. Yeah, it's not a bad one to keep on the watch list.
All right.
Yeah.
And because I don't know how large my position is, but I think it is pretty big just from the market price appreciation that I've had on. I'm trying to look at my portfolio really quick, guys. Yeah, I've
You
had a
bought it a long
pretty
time ago, so this wasn't.
yeah, yeah, bought a long time ago. I'm probably not adding to it right
Yeah.
now. But yeah, like I think I'm always keeping my eye on John Deere. And I think yeah, so it's Caterpillar that you own then, huh?
Yeah, my wife has shares in Caterpillar. So
Ah, check
it's
it out. Hmm.
yeah, I mean they're the closest competitors you're gonna get, but they do have some differences between the two. So both are fantastic companies.
What about you guys out there watching this video? Do you guys own John Deere stock? Have you guys been even paying attention to what was going on with their stock price this year? As the market's up about 15%, John Deere is down 10%, yielding higher than they usually do. And they have that oh so sweet, funny track record of increasing their dividend. We might see the same dividend for the next 3 to 6 quarters, but then when they start increasing it, they really start increasing.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt Man, and Lanny from the Dividend Diplomats, over and out.